Hello traders, it's Sunday evening, April 16th. It's time for our Sunday night video. We're going to be taking a look at our most recent picks. We're going to do some market analysis, see what the week might have in store for us, find a couple of other picks. Going to keep it very short, I promise. So ITCI, my last video was on Friday. Really like the stock. We only had a couple of hours to work with. I recorded midday. So keep an eye on ITCI. I like all of these bullish trend lines that are being breached to the upside. I love this gap. I love the fact that the gap was able to hold. Also, that represents horizontal resistance well above the major moving averages. This is a nice little breakout, and we've got some pretty decent volume as well. So I'm expecting ITCI to still show some relative strength. So we just have to wait for the market to line up for us. And we're going to be day trading that stock on the long side. Let's take a look at the other pick, BIDU, and that is a bearish pick. And you can see how the stock has been able to breach this low plus trend line and the 100-day moving average. So the caveat for shorting BIDU is we want to see it through that 200-day moving average, and we want to see it through that moving average with gusto. Not a little poke, 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 poke. Nope. Blam! Right through. Long, red, candle, heavy, volume. That's how we know that this breach right here is valid. And through that trend line, and the 100-day moving average, and the 200-day moving average, then it's got a nice clean path all the way back to this level right here, which that's not a very strong trend line either because it's anchoring these 2 points here, but that gives you an idea that it could have a pretty clear path down to the 120 level. Volume, very decent. Stock is weak relative to the market. So let's take a look at the market. We've got earnings season unfolding right now. We had news from the international banks, the multinational banks, JP Morgan Chase, Citigroup, they all responded pretty well to earnings. So there's not a lot of fear in terms of a credit crisis on the multinational level. It's really more on the regional bank level. We're going to be hearing from a lot of regional banks this week. They've been badly beaten down. I suspect that we're not going to hear of any other credit crisis in that sector. So we should see a little bit of a relief bounce. That doesn't mean that there's not something looming that we might hear about 3 or 6 months from now. It just means that for right now, they were sold off hard. We don't see any other failures. The numbers were pretty decent. So rally the stock up a little bit. Like I say, just a little relief bounce. So financials should provide a decent backdrop for the market right now. I'm not looking for those stocks to go gangbuster and to rally hard. We also see a pretty decent market bid heading into mega cap tech earnings, but we're not going to get any of those this week. We've got Netflix is going to be announcing Tuesday after the close. That's about as big of the tech names that we see this week. All the really big names are still a week or more out. So we're going to hear from some cyclical stocks. We're going to hear from this healthcare sector as well. So earnings season is going to start ramping up. That should keep the volume pretty decent this week, and that's good because we don't have any really big economic releases this week. Empire Manufacturing, Beige Book, so nothing too huge. The market has been able to rally up to this resistance level, but the volume has been very light, except for the last few days were actually pretty decent. So that's where we want to focus our attention. When we have volume, we want to pay particular attention to the price action that's taking place on those days. What have we seen? Big ranges, but no net change. What can we glean from this price action? Simply that buyers and sellers are very active. You have sellers near this horizontal resistance level who are pretty dang active. They like shorting at this level. Buyers are also fairly aggressive. And so the two sides are battling it out. I think we're going to see some pretty decent ranges today, or excuse me, this week. And we should see some nice two-sided back and forth movement. Let's go into the 15-minute chart. And here you can see, these are the last 3 days. Look, you've got sellers take the ball early, and we get a nice big choppy day where both sides are very active. Thursday, buyers had control. They rallied the market up to a new relative high. Friday, they tried to test that upside, and it got spanked down. It recovered a little bit late in the day, but you can see this is so critically important. You might be thinking to yourself, oh, he's saying the market can go up or the market can go down. He really doesn't know which way it's going to go. I don't know which way it's going to go. The price action is telling me both sides are active. So that's what we can expect to continue. That means that that is how we set up our game plan. So when we come in Monday morning, we don't lunge at the first move. We wait to see what happens. And so if you came in Wednesday and you thought, oh my gosh, here we go, bye, 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 we got a gap higher, you're disappointed very, very quickly. Even on Thursday, we had to wait for the first half an hour of trading to see some of this move unfold. And then during this day, the price action had hardly any retracement. So it was just a gradual drift higher. Fantastic. Buyers have the ball. They're able to move the ball. Let's join that move. Again, Friday, here we go. We had a strong day on Thursday. We closed at a relative high, closed above a downward sloping D1 trend line. Go, go, go. No. In fact, Friday, I'll put up the chart. I've already gone through this in my previous video, but we rally up and then wham! That was one heck of a long red candle, a heck of a smackdown from that high. And then we had follow through selling. Both sides will be active. We are not swing trading right now. Why would I want to buy and swing trade and get aggressive with swing trades when we've had this tiny little volume during all of this rally? That tells us we can't trust that move. Are asset managers going to be aggressively buying near a relative high when you still have the Fed tightening? You still have signs of inflation. You've got signs of a recession coming up. You've got forward PEs at 18, which is fairly rich. No, asset managers are not going to be chasing. There's going to be a little bit of optimism heading into earnings season right now, so everyone's going to be looking for good results. Are we going to get them? We'll see. I feel that this move is vulnerable. That's why I don't want to swing trade. Yes, you can swing trade overnight or maybe for a couple of days if you have the right stock. So let's try and see if we can find some good stocks that'll set up for us intraday. So we're going to use a custom search. I'm going to keep this very simple. I'm going to cast a wide net, then I'm going to draw it in. Let's start with the bullish side. We're looking for relative strength on a 4-hour basis and a daily basis. We're looking for decent option liquidity, not great option liquidity because I want to see a lot of candidates. And then I'm just looking for stocks on Friday that had 1.5 times their normal average daily volume. This is the list of stocks that came up. So as I click through this list, there were some pretty nice candidates, and you will see some financials in there like Citigroup and JP Morgan. Both have released earnings, so you've got that behind you. If you see some relative strength in those two stocks, they bounced nicely last week. Yeah, those may be good picks. I'm going to go with Dell. They are about a month out from releasing earnings, and here's what I like about it. You can see how there are multiple resistance levels coming into play here. It's been able to break through these trend lines with ease. It's got decent volume and it's got good relative strength. My only knock on the stock is that this move from here to here may be fairly exhausted because it's made a decent move from $36 to $43. That's a pretty decent move. That's about a 15% move roughly. So it could be getting a little bit tired up here. This is a horizontal resistance level. So let's make sure that the stock is able to preserve its relative strength. We need to wait for that market breakout. If we have that, we should expect Dell to move higher. It is what I call a fairly thick stock, meaning that it's got a lot of volume. So stocks like that have a tendency to make moves like this. So you wait for the relative strength to set up. So on Friday, you get that bounce up that I mentioned with the gap higher. Then the stock pulls back along with the market and you get your relative strength right in here. That's a nice entry point. You get a nice little rally off it. You have a bearish engulfing candle off of this relative high. Take your gains. That's how you play it. So I think Dell is going to continue to be relatively strong. I like it. We'll take one more look at the daily. We'll zoom out a little bit so we can get a longer term viewpoint. And here you can see this candle actually represents resistance, but I'm not going to give it too much weight because the start point and end point are consecutive. So it doesn't have any other touches. This is a much better trend line right here that it's already been able to break through pretty easily. The stock has a decent amount of room to get up to at least the $45 level. So I like this breakout. This is nice. You can see high, 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 high. Yeah, that's significant. Those are significant connection points to this trend line. I like the breakout. So let's go in and let's take a look at this same search. All we're going to do is change the variables to bearish and bearish, D1 weak relative to the S&P 500, H4 weak relative to the S&P 500. Let's click scan. These are our candidates right in here. And if I go down the list, I'm going to see some really nice stocks in here. I'm going to highlight TEVA. We'll take a look at that because I want to contrast two different stocks. And this is TEVA. This is a longer term chart. This is a really nice breakdown. Look at that big gap right there. Through the 200-day moving average, lots of weakness on Friday. Upward sloping trend line connecting that data point and a nice drop. Going to the 5-minute chart, take a look at that. You can see how the stock did not rally hard with the market near the close. I think TEVA works well, but it's not my pick for this reason. If I take a look at that daily chart, what does this stock do? It makes a lot of big moves, and some of them have nice follow through. So you got downward sloping trend line, breach the upside, lots of room, lots of follow through. But it tends to make these kind of wild, choppy moves. This move right here with this big breakdown, this could be the real deal, but we want to make sure that it is. So when you're watching it on Monday, make sure that the stock retains its relative weakness. The other stock that I'm going to be highlighting that is going to be the pick, and I'm going to go into OKTA because it's had some relative weakness. We'll take a look at that chart. And I like it because you can see that the stock on a longer term basis has had this downward sloping trend. And right now it is trying to breach. You can see this downward sloping trend line is intact. So that's keeping pressure on the stock. We had this low plus trend line that was breached. We have another trend line coming into play right here as well. And the 200-day and the 100-day moving average all around this price point right here. So we want to see the stock below the 100-day moving average. We want to see it through that 100-day moving average on heavy volume, and we want that candle to close below the 100-day moving average. If it's able to do that, we have relative weakness. We've had decent volume in the stock, and it's got plenty of room to run. So OKTA is the stock that you should watch on the short side. I believe that TEVA could also work well on the short side. BIDU also looks good on the short side if it can get through the 200-day moving average. So those are three nice picks for you to keep an eye on. ITCI, I think that works on the long side. You could watch some of the multinational financials. I think they could work fairly well on the upside as well. And then, of course, the Dell pick that I just showed you as well. So stay flexible. Let the market do what it's going to do. Right now, we don't have a clear read on what's going to happen. Typically see a good bit into earnings season. We don't have any economic releases that are going to be driving the market this week. So keep your trades to day trading. We've had relatively heavy volume the last 3 days, and we've seen very nice price movement. That should continue. So don't rush. Wait for your windows of opportunity to set up each day. Be flexible. Be just as willing to trade the long side, day trade the long side, as you are to day trade the short side. Thanks so much for watching. Good luck with your trading, everyone. We'll see you this week. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.